Hi there, JC De Guzman here, and this is our top 5 gainers and top 5 losers analysis for May 15, 2019. As usual, I will tell you my technical analysis and then I will deliver my overall sentiment followed by my recommendations or trade setups for short-term trading. I just want to make that clear. This is not for long. This is not a piece of advice for long-term investing. This is for short-term trading. Okay? So there you go. So let's begin with Bloom. Bloom closed on May 15 at 10.98. Support is at 9.32. Resistance is at 11.12. Although Bloom is still moving below the shorter term moving averages, it manages to keep its position above the long term moving average, which is the 200-day SMA. So as far as the position of the current price with the position of the simple moving averages in relation to the position of the SMAs, I would say that Bloom is bearish in the short term to medium term, but remains bullish on the long term, on the daily chart, of course. So this green candlestick yesterday, so we can say then that Bloom respected the psychological support at 10.39 or maybe 10.40 because it translated that area as a rebound zone, and this green candlestick also came with a green volume bar. Later on, we're going to check the presence of our 4-point criteria on Bloom. But meanwhile, foreign investors sold about 39 million pesos worth of shares on May 15. And mind you, MACD is still moving bearishly below the signal line. So let's see if there is a formation of a bullish convergence. Nope. I'm not seeing any formation of a bullish convergence between the MACD and the signal line. Meaning to say, MACD is telling Bloom, give me some more green candlesticks perhaps. And then I'm going to show my MACD line bending from the southward going to the northward direction then. Until then, maybe we would see a formation of a bullish convergence between MACD and the signal line once the price crosses above this resistance at 11.12. Alright, so let's check. Is our 4-point criteria present? Is it a green candlestick? Check. Did it close above the VWAP of 10.8? It did. Check. Do we see a green volume bar that is at least higher than the 50% of the 10-day volume average? We do. So let's check the trade and volume distribution chart of Bloom for the fourth criterion. So yes, the dominant range is between 10.7 all the way to 10.98. So that's closer to the intraday high than the intraday low. So the 4-point criteria is present. My overall sentiment for Bloom in the short term, of course, I'm still bearish on this one, especially as far as our 10 SMA and MACD combo is concerned. But just like what I wrote in our quick start guide, and just like what I have been saying in my daily articles, that when the 10 SMA and MACD combo when it remains false, meaning to say it's not yet conditions are not yet met, then there's an alternative for our 10 SMA and MACD combo, and that is the presence of our 4-point criteria. So it's a way. If the 4-point criteria are, or if the 4-point criteria is present, perfectly present, then we do have a logical reason to preempt the 10 SMA and MACD combo. Preempting the 10 SMA and MACD combo means doing a test buy even though the conditions for the 10 SMA and MACD combo have not been met yet. But we just have to do it carefully because again, we don't have a confirmation coming from the 10 SMA and MACD combo yet. We are just trying to preempt. Okay? We're just trying to preempt the conditions for the 10 SMA and MACD combo. So if you would like to do a test buy, Let me speak for those who don't have Bloom but are planning to trade Bloom on the short-term trading purposes. Again, you can do a test buy within that range that I showed you a few seconds ago, not at any price. I'm not going to give any advice for those who may still have Bloom, because by now, by the looks of this chart, you should have already sold your position regardless of your percentage of risk tolerance. When I say regardless, I'm not saying those traders who applied 70% risk tolerance, because for me that's, well, this is just my opinion. For me, that's illogical. Applying 70%, applying 50% of your capital risk tolerance for short-term trading purposes, I think that's too high. That's relatively too high for me. For short-term trading purposes, I don't go higher than 10%. On very rare occasions, I would adjust. I already adjusted my trailing stop loss from 10% to 15%. And I think I can count on my 10 fingers the number of those instances when I did that. But ideally, I don't go beyond 10% risk tolerance when I do short-term trading purposes. Okay? So, needless to say, it's already insane for me, on the insane level already for me, if I would apply 50% or maybe higher than that, 50% risk tolerance or higher for short-term trading purposes. And of course, it's a different topic when it comes to long-term investing. I have a way higher percentage of risk tolerance when it comes to long-term investing, but that's another topic. And we have a platform where we can discuss that in our private clients forum. But there you go for my sentiment and piece of advice or recommendation for Bloom. Let's move on to the next stock in the list. We have SSI. SSI closed on May 15 at 3.36. Support is at 3.12. You can say that's 3.10 also. Resistance is at 3.4. MACD is still moving bullishly above the signal line. And on the other hand, RSI is already super close, let me say that, to the classical overbought level. So just that's a friendly reminder, guys, for those of you who have SSI, there's your resistance, 3.4. Okay, so when the RSI is approaching, when it's super close to the classical overbought level, make sure that you also consider the option of locking in some profits on the immediate resistance level. So when I say locking in some profits, it does not necessarily mean that you will sell every single share. You have the option to sell just a few tranches, especially if you have a sizable holding on this particular stock. Okay, let's say you're holding about 50,000 or maybe 100,000 pesos worth of shares for SSI. Maybe you can divide that 50,000 worth of shares into two. So sell half once it hits 3.4 or higher, so that you can still have the other half to take advantage of the upward momentum should the price continue to move higher than 3.4. Now, if the price will bounce away from 3.4 from the northward going to the southward direction, then at least you were already able to lock in your profits for the 50% of your shares. Okay, so that's the strategy there as far as the position of the RSI is concerned. Now, on the DMI histogram movement index, I'm seeing that the upward momentum remains strong on the strong level. Okay, now let's take a look at the 4-point criteria, their presence. Do we see green candlestick? We do. Check. Did it close above the VWAP 3.29? Check. Do we see green candlestick that is higher than the 50% of the stock's 10-day volume average? Check. How about the trade and volume distribution chart? Well, let's see. So here, the dominant range is between 3.3 all the way to 3.4. Well, that's closer to the intraday high than the intraday low. I am bullish on SSI in the short term, and on the daily chart I'm already seeing a perfect bullish alignment among its three SMAs. So it's bullish in the short term and long term on the daily chart. My recommendation, if you still have SSI, good. You should be good to go. Follow my previous advice for SSI, the one that I mentioned a while back. Now, if you don't have SSI but you are planning to trade the name, mind you that the candlestick is already close to the immediate resistance. So if you really have a high risk level when it comes to short-term trading, in connection to your experience and knowledge when it comes to short-term trading, let's say you are already maybe 50 to 70% familiar with our methodology here, the ones that I'm teaching you, that I have been teaching you, then maybe you can risk it and do a test buy within the dominant range that I showed a while back. But if you are relatively new when it comes to short-term trading, let's say you have just opened your account maybe a few weeks or a few months ago, then I would say you wait for a pullback. Ideally, is closer to 3.12. Okay, so don't hurry. So your plan of action can be really on a case-to-case basis, depending on your personal risk tolerance and investment horizon. So next stock we have SurePass. SurePass closed at 1.03. It managed to respect the resistance, support rather, near 0.91. Okay, and despite the presence of this green candlestick, SurePass is still moving below the 10 SMA. FYI to that. So it's bearish in the short term and long term on the daily chart. Let's take a look at MACD. So I'm seeing already the formation of a bullish formation between MACD and the signal line, but this green candlestick, the recent candlestick, was not enough for a sure pass to position the last price above the 10 SMA. Okay, I think we would only see a crossover between MACD and the signal line on the bullish stance, on the bullish side of the story, once the price um, is somewhere between the middle of 1.05 and 1.35. Okay, on the DMI histogram, the bulls have not taken over yet. The bull is not yet in their court. Okay, it's too early to tell that just because we saw a green candlestick. Okay, but who knows? Perhaps Surpass the already saw 0.90 or 0.91 as a psychological support, as a possible rebound area. So we will have to continue monitoring on Surpass if you are interested to trade the name, to see if it can, if it can ascend, move move up or move higher than the position of its 10 SMA. When that happens, even though MACD is not yet crossing above the signal line, you can do our preemption technique, our preemption technique. What are those? What is that? Well, check the presence of our 4-point criteria. If they are present, then you can do a test buy. And don't forget, by the way, to calculate your reward to risk ratio, especially the newbies. Calculate your reward to risk ratio first. If you're happy with the reward to risk ratio that you got, then do a test buy. That's the time that when you should do a test buy. So don't skip the part of calculating your reward to risk ratio. Sir, what's that reward to risk ratio? What's that RRR? Go back to the quick start guide. I explained it there. I gave examples. I gave the formula already. So it's in the quick start guide. Now, 4-point criteria, let's check. Green candlestick, check. Did it close above the view up of 1.00? Yes, check. Do we see a green volume bar above the 50% of the stock's 10-day volume average? Check. How about the trade and volume distribution chart? Here. So the dominant range is between 1.02 or 1.01 all the way to 1.05. That's closer to the intraday high than the intraday low. So the 4-point criteria is present. You have a data-driven reason to preempt the 10 SMA and MACD combo. But again, calculate your reward risk ratio first. Number 2, strictly do a close monitoring. Okay? After buying within the dominant range. After doing a test buy. Number 3, make sure that you trade X. Only if you can monitor the price movement by the second. If you have a day job, please don't steal hours from your company. Okay? at this moment, while we don't have a stop loss feature among all brokers in the Philippines, okay, please don't do short-term trading yet. Even though you can subscribe to somebody else's service of giving you an SMS notification, still, what would you do if you are in the middle of a meeting? If you're in the middle of a meeting and you receive an SMS alert saying that your trailing stop loss has been hit, what would you say to your boss? Boss, may I go out? Okay, so I don't think that's that's the right thing to do. Anyhow, so there you go. I'm bearish on Surpass in the short term and long term on the daily chart, but you can preempt it if you would like to. If you would like to, since our 4-point criteria are all present, okay, and do it. Before you do it, you do a reward to risk ratio calculation, and then you do a test buy, and then make sure you do have the time to monitor the price movement by the second, not every 1 hour, not during your break from work, not during lunch. Okay. Now corporation. So now closed at 2.16. It managed to respect the support at 1.98. Resistance is at 2.5. Is it already above the 10 SMA? Yes, it is. It is above the 10 SMA by 2 centavos. Okay. And I'm already seeing a bullish formation between on the MACD. But take note, MACD is yet to cross above the signal line. Okay. Um, it's not yet a confirmed sign of reversal. Take note of that. It's just a formation, not a confirmation. It's not yet a confirmation. Okay. So it's been in a downtrend for for a while already. Anyway, now corporation. Let's see. The 10 SMA and MACD combo is not yet. The conditions are not yet met. But let's see if we have the data-driven reason to preempt it. Green candlestick, check. It closed above the VWAP of 2.12. Yes. Green volume bar, it's towering. Yes. So how about the trade and volume distribution? Let's see. So the dominant range is between 2.11 to 2.2. It's closer to the intraday high than the intraday low. So we have a data-driven reason to preempt the 10 SMA and MACD combo, but only if you are interested to do that. So we're not going to trade. I'm not saying trade now by force. It's up to your investment horizon and risk tolerance and time, of course, time, and of course your trading capital, your play money for Now Corporation. So if you would like to do a test buy, do it within the most traded and most voluminous range that I showed a few seconds ago. So I'm still bearish on Now, but we have a data-driven reason to preempt the 10 SMA and MACD combos, so to say. Okay, next, Pepsi Cola, PIP. PIP closed at 1.23. It managed also to respect the support at 1.15. Resistance is at 1.30. It's still moving below the 10 SMA, FYI, and I'm still seeing a perfect bearish alignment among its three SMAs. I'm seeing, however, I'm seeing a formation. Again, a formation, not a confirmation. A formation of a bullish convergence between MACD and the signal line. Okay, so let's see. Foreign investors, by the way, they sold about 3 million pesos worth of shares on May 15. Okay, now how about the presence of our 4-point criteria? Let's see if we have a data-driven reason to preempt the 10 SMA and MACD combo. Green candlestick, check. Did it close above the VWAP of 1.2? Check. Is it a towering green volume bar that is higher than 50% of PIP's 10-day volume average? Yes, checked. Okay, let's see the trade and volume distribution chart. The dominant range, it's quite groggy. It looks like I'm seeing two different ranges, two dominant ranges. There's one from 1.2 to 1.23. There's another one at 1.14 to 1.16. Take note that PIP closed at 1.23, so let me give that on the higher range, 1.2 to 1.23. But should PIP decline again, then you monitor it between 1.4 1.14 to 1.16. Okay, so I'm not 100% bullish on the fourth criterion. By the way, I'm not 100% bullish. I would suggest not to preempt PIP yet. So maybe after 5, 10, or 15 minutes of trading, then you can do another trade and a fresh trade and volume distribution analysis to see if we will see a solid bullishness on our trade and volume distribution analysis. So if I were to put a percentage score on the bullishness of our 4-point criteria, I would say it's just about 85% bullish, not yet 100% bullish. Okay, so that's my recommendation. Don't buy it just yet. Okay, and by the looks of PIP, since it has just been moving sideways since November last year, November last year up to date, and I don't think, did any of you find any signal to trade the name? I don't know about you, but for me, I don't like trading ranges. I'd like to trade trends, not ranges. Anyway, if some of you have a PIP, it's either you hold your position for as long as it's above your trailing stop loss. Don't buy just yet. Don't top up yet. Don't apply the concept of averaging down when it comes to short-term trading just for the purpose of seeing your average price going down. No, you average down if you have data-driven reasons uh, that tell you that the ascent in price is more likely to continue to go up. Okay, you don't use the quote-unquote averaging down just for the purpose of seeing your average cost or average price, whatever you want to call it, going down. Okay, you don't do that as a justification. Okay, so next we have an index company, Jollibee. JFC closed at 2.93. It's at the brink of breaking below its support at 2.91. Resistance, the midterm resistance is at 307. The major resistance is at 325. It's now moving below the 10 SMA but still hovering above the 200-day SMA. So on the daily chart, JFC is bearish in the short term but bullish in the long term still. Foreign investors sold about 132 million pesos worth of shares, and they have been registering net foreign selling days for consistently for 12 trading days, and that's another reason why this index company's share price is going down or has been going down for the past how many 2 weeks maybe. Mm-mm. Let's see. So there's already a death cross registered on the MACD. Mean to say MACD already crosses below, not above, below the signal line. That's a bearish signal for me. Okay, so it's all the more that you should not hurry in trading JFC for short-term trading purposes. So it's highly likely to test the support at 2.91, or even it might also go lower than this, seeing the bearishness of the foreign investors and that confirmed bearish signal from MACD. It might go lower than 2.91. So don't hurry, don't do short-term trading on JFC just yet. Even, let me segue this as well, even for long-term investing, don't top up just yet. Let's wait for the dust to settle down before we top up on JFC. I'm not going to check the presence of the 4-point criteria because surely it's not 100%. Number one, it's already a green, it's already a red bar, red candlestick. Okay, so that's my advice. I'm bearish on JFC in the short term. Don't top up just yet. Don't enter a new position just yet for short-term trading purposes. Wait for the dust to settle down, whether at 2.9 or 266, wherever. Wait for the dust to settle down. That's the bottom line. Oh, let me show you the trade and volume distribution chart. Here. So the dominant range, let me zoom it out so you can clearly see the price points. The dominant range is between 302 to 303, and the closing price yesterday was 293. So let's not focus on this 302 to 303. Let's focus here. 293 all the way to 295. 293 all the way to 295 here. That's the focus. It's closer to the intraday low than the intraday high. Therefore, I'm bearish. Next, we have HLCM. The cement company closed at 14.36. Support is at 13.46. Resistance is at 15.44. Let's see. Since this 13.46, the support level is almost in confluence with the 61.8% Fibonacci retracement. Let's see if it will rebound here. Let's see if it will continue to descend all the way to 13.46 and rebound from there. Okay, so MACD is still above the signal line. Okay, MACD is still above the signal line. RSI just hit the classical overbought level, so maybe that's one reason why traders decided to lock in profits near 15.44. And that's normal for a bullish stock to consolidate after going in an uptrend direction, to consolidate, to regain another, more momentum. Should, of course, should there's still, if there's still demand for the stock to, to be bought at a higher price than its previous high. Okay, so what's my recommendation? We're not going to check the 4-point criteria as well, because obviously it's not a perfect 4-point criteria already, because there's a red candlestick. Yes, foreign investors, by the way, they bought about 41 million pesos worth of shares on May 15. So what's my recommendation? Before that, let's see the trade and volume distribution chart. So here, FYI, it closed at 14.36. It's somewhere at the bottom. See this one. The dominant range is between 14.9 to 15.1, but it closed at the bottom, 14.36. This one, it closed here. So what does this tell us? It's quite challenging to tell if HLCM was really bearish yesterday based on this price action. Well, what I'm trying to say is the bearishness seemed to happen only on the second half of trading, probably in the afternoon. Yes, because the dominant range originally was closer to the intraday high than the intraday low, but it closed at a price point closer to the intraday low than the intraday high. So, meaning to say, I'm not going to discount the possibility to see a rebound on HLCM's price by the next trading day. I'm not discounting that possibility. Okay, so what we should do then? Let's monitor HLCM for now. Let's not make a conclusion on whether we should enter a new position and when. Okay, so that's the plan of action for HLCM. Let's monitor it for now. The verb is monitor, not buy. Okay, but of course you will have to sell. If let's say you bought HLCM below, anywhere below 11.23 or below 13.46, and your trailing stop loss has been already hit above 14.4, of course you will have to sell. Okay, you will have to sell. But for those who don't have it, take that advice, or it's up to you if you would like to take that advice or if you would like to risk it. But as far as my analysis is concerned, I would advise that you should monitor HLCM just for now. Don't do anything just yet. If you don't, this advice, by the way, is for those who don't have HLCM. Okay, let me just be clear on that. If you have HLCM and your trailing stop loss has been hit, sell by all means. Okay, next, PHA. Someone in our private clients forum asked for my analysis of PHA yesterday, and here's my latest analysis. PHA closed on at 0.94, support is at 0.9, resistance is at 1.25. Foreign investors have been selling consistently for 11 trading days. 11 days straight for PHA. And PHA is already still moving above the 10 SMA, but it's still below the medium term moving average, the 50 SMA. So this is not yet a perfect bullish alignment among the three SMAs. On the DMI histogram, I'm not seeing. It says here that the upward momentum is not yet on the strong level. It's not yet on the strong level. So let's see. There's a possibility for PHA to just trade the range, because on the DMI histogram for the past 30 trading days, the ADX, this black line, has been in the neutral trajectory. So there's a possibility for PHA to just trade the range between 0.9 to 1.25. So it's not going to, it may not trend, but it may just trade the range between the immediate support and resistance level. If you are a fan, if you are interested in trading ranges, I don't, by the way, then you can continue monitoring PHA and do a test buy once the 4-point criteria are present, because right now it's still above the 10 SMA and the MACD is above the signal line. So all you have to do now is to wait for the presence of our 4-point criteria. So you will have a data-driven reason to do a test buy. But before you do a test buy, don't forget to calculate your reward to risk ratio as far as the support and resistance levels are concerned. Go back to the quick start guide. The formula is there. Samples are there. Okay, next. Oh, by the way, let me show you PHAs. See, there's a sign of indecision as well on the trade and volume distribution charts of PHA. When I say sign of indecision, it means almost all traded price points got the almost equal size of bar, the length of the bar. So it's, if I would pick a dominant range, it's almost like I would say from 0.91 to 1.02. Okay, but but this is the trade and volume distribution chart of PHA. Okay, so if I would say the dominant range is between 0.92 to 1.01, it's almost the same as the dominant range is everything that happened on May 15. Okay, so there you go. That's why my advice is that you continue monitoring PHA for now. If you are interested to trade stocks that might not register a trend but a range only. Okay, next we have DMC. DMC closed at 9.86. It has already touched the support level at 9.86. So resistance is at 11.15. It's at the brink of making 9.08 as the immediate support once it breaks below 9.86. And where is this 9.08 support level rooted? Let me show you that. It's a historical support level still, and it's rooted all the way to somewhere here, 2013. Okay, 2013. And by the way, foreign investors sold about 105 million pesos worth of shares on May 15. MACD is still moving. It's still busy. It does not care. It doesn't seem to care. It's still moving bearishly below the signal line. RSI is about to touch the classical oversold level. So let's see, let's see. Let's see if DMC will translate 9.86 as a rebound level, since it seems. Let's see if RSI will translate 9.86 as an exhaustion level. Exhaustion with what? Exhaustion in selling and throwing up. So if DMC investors have already thrown up everything that they wanted to throw up at 9.86, then we might see a reversal, a sign of reversal, or a reversal of sentiment at 9.86. But we are yet to confirm that. We are just we're just forecasting or making making an assumption. Okay. Mind you, by the way, the downward momentum is still strong. It has not lain low yet. Okay, it's still strong. So it's all the more that we should continue monitoring the MC for now and not do anything um, uh, silly just because we got excited in making some assumptions. So assumptions is not a bad assumption. Making an assumption is not a bad idea, but we have to stick to the rule, to our process of doing any action based on what we see on the data. Okay, not just on what we think, feel, or believe. Not just based on instinct, because numbers don't lie, data don't lie. Okay, so let me show you the trade and volume distribution chart of TMC. It closed at 9.86. So yeah, this is the longest bar. This price point between 9.86. So it's all the more that we should continue monitoring DMC towards the bottom. Okay, so I am bearish on DMC. Don't buy it just yet. Of course, you by now you should have already sold DMC if you traded this stock a few weeks ago for short-term trading purposes. You should have already locked in your profits above 11.15. Okay? Well, not just above 11.15, but at 13 pesos per share. Assuming that you traded DMC below, assuming that you entered a new position on DMC when it was below 11.15, you should have already locked in your profits above 12.5, 12.5 or higher. But if you're still holding on to your DMC, I think you have you don't have the right understanding of how a trailing stop loss work. If you're still holding onto your DMC for short-term trading purposes, okay? Let me make that clear. This is for short-term trading. I'm not talking to long-term investors. Okay? All right. So there you go. I'm bearish on DMC. Don't enter a new position just yet. Let's wait for the dust to settle down as always. Last stock in the list, we have green. Let's see if it's a green candlestick. Oh, it's the opposite. Red candlestick. Support, it closed at 2.29. Support is at 2.25. Resistance is at 2.9. Foreign investors sold about 1.5 million pesos worth of shares. MACD is still bearishly moving below the signal line. No sign of any bullish formation of a no sign of a formation of a bullish convergence between MACD and the signal line. It's still completely bearish. RSI, on the other hand, is approaching the classical oversold level. So we'll see again if green will translate 2.25 to 2.2 as a potential rebound zone. Okay, so I'm bearish on green. Let's see the trade and volume distribution chart. The dominant range is between 2.29 to 2.38. Still closer to the intraday low than the intraday high. So there you go for my technical analysis for these 10 stocks. Okay, for May 15, 2019. If you have questions, please ask in our private clients forum. Again, my name is JC De Guzman. Have a great day.